Hi, good evening all. Tyrone here, welcome to another video. This video I'm going to show you the way I trend trade. No different than if I'm trading supply and demand, but how I'm actually getting into a trend at the very beginning and pretty much exiting at the very end of the trend. I don't like to get in mid-trend. I don't like to have a very strict rules like a 50 period moving average. You've got to be under it, above it, below it, to short. I've back tested hundreds of trend following strategies, and over time they're not profitable. So therefore, over years of back testing again, the only way to consistently make money is to get in before a trend begins, or as a trend is beginning, and get out when a trend is finished. Now sometimes let's say we're using a daily chart, sometimes a trend may be only 200 pips, 150 pips. Other times it's 1000 or even 1200 pips, and that is on a daily chart. That's obviously the top end. On average you're looking about 400 to 600 pips on a good trend. Now the secret is to be able to filter the losses. In other words, don't take losing trades or as many, and also to reduce your risk, which means when you get into a particular trade you need some rules to follow, so it's non-subjective, so that you can actually reduce your risk. So let's say you take a entry and it is 100 pip stop, and the market does go your direction, but let's say that it's not really going to establish a trend. Therefore you're reducing your risk slowly from maybe 100 pips to 80 pips to 60 pips, and maybe you'll get stopped out at 40 pips because the trend is not working. So you're reducing your risk. This is what I've incorporated into this strategy, and at the same time you're going to catch a trend to the end as well. So if it does work, you're just going to not get stopped out too soon, not get stopped out too late, so you're not giving back too much. You're going to get stopped out when the trend pretty much ends. Now there is a flip side to this. There's two sides to it. One, you do need to have a bit of technical skill, technical analysis skills, and that doesn't mean loads of different candlesticks and all that. It's a very common sense strategy, and as you can see at the moment I've got this triangle wedge formation, and this is what I'm looking for. I'm either looking at ascending, descending triangles, a wedge formation, even a flag pattern if I'm going to look for a trend to start on a daily, but I'm going in direction of maybe a monthly trend. You can see generally there's just constant upward movement. There's always ways to get in the general direction of a larger trend using the daily, but only capturing the daily trends. So therefore you're not going to give back too much to the market if you let's say get into that near the end of a monthly trend, so to speak. So you get a bit of a pullback on the monthly, you're using that daily to catch a new daily trend, so you're in and out within a few weeks or a few months. So this is what I'm looking for ideally. I'm in some trades at the moment. This is the New Zealand yen, and I've got this 20 period. This is part of my strategy, is using the 20 period moving average. Now I've done a lot of back testing on trends with moving averages, 20 moving average. You can use a 50, a 10 and all that. The 20 to me is the one that kind of respects supply and demand on a decent trend. If I've looked back over years and years back from 2000, different currency pairs, the data, and when a trend evolves, it's the 20 period moving average on that particular time frame that does best. Now obviously if you've got an 8-hour trend, at the 20 period moving average might work fine on that, but it doesn't do so well on the 4-hour or the daily. You're going to give back too much, so it's not 100%, but this will keep you, whatever time frame you're using, and I never go lower than the 240 by the way. It will keep you on the right side of reducing your risk and getting that and capturing a big trend. The key component to this is pretty much the moving average moving flat, or as you can see here, price weaving through the moving average. and then I'm looking for a breakout with a confirmation. Now let me just drop this down to 240 time frame. I had from this high here originally, I don't want to move my stop. From this high originally I had the trend line doing this, and what happened is price spiked through but never really closed above this trend line, and then we had a pullback. So all I've done is adjusted it like this until eventually price had a close above. Now not only on this time frame, but more importantly it was the daily right here, which you can see where I've got an entry. If I enlarge these candles above this trend line right here, that was a formation within this general pattern. This line however was like this at the time, just so you know, and then we had a low here, so I adjusted it. This is part of my strategy. All I'm doing is looking at the general pattern. I'm not drawing a trend line because I've got high highs or lower lows. I'm just looking for pivot points and trying to get that pattern. Price is moving sideways. I'm weaving in and out of this 20 period moving average, and then I suddenly closed above the 20 period exponential moving average, and I'm outside of this range right here. That's where I took my entry. My stop was at the time down here, 20 pips below the EMA, and as you can see, as the days have gone on so far, my stop has moved 20 pips. It needs to move up just slightly more there, 20 pips below this EMA. Now this is a very nice trend on the 240, and now I'm taking a couple of positions. I've got one in the New Zealand yen, and I've also got one in the Aussie yen. The New Zealand yen is what I'm going to try and trade or manage to trade using the daily time frame here, because I was waiting for this part of the bigger time frame wedge formation to close above, which we have. So now I'm looking at price maybe trying to rock it out of here, because it's a breakout and you get fast movements. So what I'm looking for is a strong move up, then maybe a little bit of a pullback and a continue higher, and then hopefully I can get out somewhere in this region or much higher. Now we're going to come out to the monthly. If we look at the monthly is in a downtrend. Now I'm going against conventional wisdom of trend trading here, but I'm not looking at trying to get in on this monthly downtrend. I am literally trading what I see on this daily, the wedge formation. Now we could have broke lower, and I could still get stopped out here for a small profit or even a loss still, and then we break this lower formation line. I'd rather call it a formation line than a trend line, and then I'm going to short it. So I've been scanning the markets, and this is the perfect time at the moment. There are loads and loads of setups, even in the pound yen, a lot of the yen pairs. Let me just come out to let's use this and put on the 20 MA. If we come out to monthly, we're in a downtrend, but if we look at the weekly, we start to get a formation here. On the daily, we're starting to weave through this 20 EMA. Now you could do it on a 240, weekly we could be ranging, but at the moment the 240 is not the chart to use, it is this daily, and that works out with this pattern that we've pretty much got this, that we've from here, that we've closed, I should say it's about here actually, that we're about to close above, and we've got this pattern. So if we break the low and close below, then I'm going to be shorting this following my strategy, which I haven't quite fully explained yet. So now what I'm looking at is a close below, and then I'm going to trail the 20 EMA. It's as simple as that until I get stopped out. Now when I've back, and I will go through some back testing and Forex Tester 2 with this, and you'll be pleasantly surprised that it filters out a lot of losses, because I'm using the chart pattern, not just the daily, it could be a weekly chart pattern, it could be a monthly chart pattern, And let's have a look at another. What one am I in now? Euro Swiss. This one is a big. Look at this pattern right here. We have got some form here of a channel. I don't use a breakout of a channel. I'm always looking at breaking either of a flat trend or a very gentle sloping trend line, ideally. So what I've got here is the starting, because we've got a pivot low here, of a formation. Now from the high to here is my first attempt. We've broken this. If it fails, I really want to break this one next and have another try. But this is giving me a very low risk entry. If I enlarge this a little bit more, this is the close above, and this is why I've got into this particular. I'll show you on the daily. The weekly's closed above, but also the daily has too. Let me come back out a little bit more. Yeah, as you can see, there is a close above, and I believe because of this candle here, that's why I took the trade. Everything else has been wicky, and I think if we tighten it up just slightly, we had a close above here. That was enough for me. I took an entry, my stop went below, it was down here somewhere originally, and now I'm adjusting it. If we look at the 240, I wouldn't be using it to get in because price is already in its own kind of trend within that range. So it was the way price was weaving a pretty flat 20 moving average. In other words, it might be wiggly, but we've not broken out much of a range in that 20 EMA, exponential moving average there. So once we took out and I might be telling a lie here, I think I had this kind of formation going on, and then we had a close here, and I think it was the pullback that I got in, something like that. And I know we've got a bigger trend line and also an even bigger one right here. But think about it, when they break these pattern trend lines, price moves extremely quick if the trend's going to work. So all I'm doing is taking the trades after we close above these particular patterns. It's as simple as that, with a 20 period moving average as my guide. Now I want to manage the trade. If price has moved flat here on this 20 EMA for a while, that's really the ideal time frame to manage a trade. As an example here, fairly flat, but then if you'd manage it here, you wouldn't get stopped out until about here, as an example. But what happens when you take it at the breakouts, you tend to get a much steeper 20 EMA, and if anything, moving up quite high and fast, enabling you to trail this with a decent amount of pips mounting up every day until you get stopped out. Let's have a look at the Aussie yen. This is another one. Let's come out to the monthly, the weekly, and then the daily. You can see the patterns there. This is the first pattern break, and there is a higher, this is a general trend line, not so much a pattern but more of a trend line. If we come out to the weekly, you can see from the high to this high, it's pretty much a trend line. If we break that, we break the EMA here on the weekly, good chance of a nice move, which means I'm already in here while it's flat. And there's also opportunities maybe to have gotten in down here, this sort of area, if and we have got it still, we've got a ascending trend line which we had here, pattern. So this could have been another entry area, not the one I would have taken, I'll be honest with you, but as an example, moving average, moving flat, and then it closes above, and then off you go. But this is, I'm using the daily. Now as you can see, it's not perfectly flat, but we are weaving through it. That's all I need. And at the same time, we broke this trend line, so I took a trade. This one I will manage on the 240. I'm just going to let it break away, but I probably will manage this on the 240. The reason why is because we've not moved too far just yet. If we look at the New Zealand yen, however, a big push away, so I really want to manage that on the daily. So I've got two positions open, kind of like using the 240 and using the daily, just in case the particular pattern doesn't work and it's a false breakout. It reduces my loss, simple as that. The Euro Swiss, I did have one actually on the weekly, got stuck. I'll come on to that now actually. It was the dollar CAD. Where are we? Now this dollar CAD, and I'm going to go into this, I had this. I had a close here, and I actually entered, and look at this, look at it weaving through the weekly. I had an entry round about here, my stop was above here, I got stopped out round about, I think it's about 16, $18, which is you know, 180 pips. So it was entry round about here, got stopped out around about 180 pips, and then I've had to redraw the trend line like this. But what I tend to do is use the two most recent lowest peaks, because the angle's a little bit shallower, and I'd rather be closing below this trend line as opposed to this. But this is the pattern. I keep adjusting this, and if we come down and then here and spiked up, I do it again, because this may end up this angle. If we move back down here, push back up, but I will still have the right angle for the breakout on this particular trend line. So I'm just keeping an eye on the patterns that can evolve potentially. Now I'm waiting if price wants to close above on the weekly, above here. Remember, because we are weaving through on the weekly moving average, I really want to see the weekly close above, but a little bit more aggressive. You can wait for the daily. If the daily closes above, then that could be a sign to get in, a bit more aggressive with the stop below the weekly. Has to be below the weekly EMA. If price comes back down and stops you out like I've just been stopped out, it means false breakout, in my opinion, or price may continue ranging here. Now the reason why I expand the moving average, the trend lines each time is my filter to losing trade. I don't want to take another trade. I don't want to drill it down to 240 and start to do something like this and say, right, we've broken above that one on the daily, we're weaving through, now I'm going to buy. When I'm stopped out, I kind of look at the higher or the bigger pattern on the higher time frame, or the longer time frame, which means the longer this has been going. So I want to expand my range until eventually it breaks from this range, and then I want to go with the market, and that is pretty much the filter for this particular trading strategy. And the reason I'm putting this one out now is because I'm in these trades, like the New Zealand yen. I'm going to manage them. I'll do an update, but I'm going to go over very briefly to the when I looked at high time frame turning points, big turning points, and this Aussie dollar is one. This one, rather than looking at, and this is a weekly weaving through, I don't think it's a monthly, no, a weekly. This is a weekly pattern, and you could draw this pattern from this high. See, no close, adjust, always adjust to the recent, and then bring maybe this down. So I've got a higher area to make sure I close above. You know, it filters out the false breakouts. But what it is here, I'm not looking at trading it that way because the range is quite big. I was looking at higher time frame moves, a 300 pip move based on this range. So I'm trading within the range. That's why I use my big turning points and have a profit target. I want to get out here, and then if we break and close above, and maybe I'll use the daily for a more of an early entry, early warning, because the weekly bar may move so far it won't be worth it unless we have a pullback. And that's another point that we'll come on to as I back test and show you this. So within this weekly range, I wanted to short here, get out down about here. So far, price is doing what it should do. As you can see, I could manage this using this, if I wanted to, using these EMA, but because this EMA doesn't belong to this strategy of my range trading, then I won't be managing it following that. You can't start to mix and match until you've done the back testing. So I've got one in the Aussie dollar, which is at a higher turning point, but also the New Zealand dollar. Let's have a look. I don't think I've drawn the pattern on this one, but basically, hold on, that's New Zealand dollar. Sorry, New Zealand yen. Was it? New Zealand CAD. Let's have a look. This will show the pattern. There we go. Highs here. I'm expecting a close above this be a nice breakout, because if we look at this monthly, although this wouldn't, you know, this area you catch a trend on the monthly, this you wouldn't. But what I'm looking at is when price breaks here, not to catch a monthly trend. Once I'm in this, I may manage it with a weekly. Look at these weekly moves here. For example, if you was in this here, you'd be managing and trading it all the way up to here on the weekly. What I'm always looking for is the correct time frame, and normally when price rallies through, and if you can see we have got a bit of a pattern going on here, which is, or I should say, weaving through. There's a little bit of a high here. If we have a low, then I may have this, but I really want to break above this here before I decide to go long, and then I may be managing it on a daily. And what may happen then is we have a push up and then a pull back on the weekly, then I may get another formation on the daily similar to what we've got here, and then another breakout which I try to get in. So basically I'm using a low risk and maybe getting a 6 to 1, a 10 to 1, a 20 to 1 reward to risk ratio, following the whole trend on the daily between these breakout points. The higher the time frame, the stronger the breakout, in my opinion, the further it's going to go. So you may want to look at a weekly pattern to get in for a daily trend. Pattern's not really developed here. The only one we've got at the moment is this big monthly one. So any close above here could be a daily. Then I might be looking for an entry, providing we've got the right pattern with the 20 EMA. And we have on this monthly. Now the downside to that, if I get a daily entry here, we may have lots of false, not breakouts, but false entries, because my stop's going to be quite tight and price may want to retrace all the way down here before continuing higher. So stop should be ideally where my take profit is here, if I was to trade a breakout of here. So what I need to do is find the pattern on the daily or the 240 as an example. If we was already up at this line and I had this pattern right here, something like this, look at that. That close above right here would be my entry, with my stop where this is weaving through the 20 EMA here, and then I would just trail this 20 EMA. Unless this moves up extremely rapid away from that EMA, then maybe I'll switch to the daily, because we're also weaving through on the daily here. Although the daily would have this kind of pattern where we've got a close above. You see, higher time frame pattern, same entry area. So maybe then we'll use the daily, or maybe take two positions and manage 240 under half the position, the daily under the second half. It doesn't matter how you do this, this is consistently profitable over the years. It's the only one that filters out the losing trades where other trend strategies don't. And that's pretty much it, guys. I just wanted to get this video out so that I can show you the way I am now live trading, and I'm actually kind of only using this account at the moment to live trade this particular breakout strategy that I've been back testing and working on for quite, I would say about 5 months now, quite a considerable time, trying to get the right pattern with the EMA and trying to find the right trend. And anybody who's seen my previous Bollinger Band and other videos, I've always worked with this 20 moving average, 20 simple or EMA, because it does capture very, very good trends from beginning to end. In my opinion, it's the perfect angle, the perfect amount of bars. And like I say, the markets are not always going to be set up for the daily or the weekly or the 240. It might be an 8 hour, therefore it's not going to work. So that is pretty much it. I just wanted to get that one there, show you the strategy that I'm trading live now, and then I'm going to do this for a few more months, and then I'm going to start to trade my own personal investment account that I'm using to trade supply and demand. And that is it, guys. Thanks for watching. Don't forget to subscribe and give me a thumbs up. All the best.